Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing some amount of red on the screen, but no accelerated losses is what we are seeing. So it is a day of range-bound trade with a negative bias. We have the Nifty, which is down around 30 odd points, the mid-cap index, which is down around 250 odd points. But the Bank Nifty has recovered from the day's low. So the Bank Nifty is down just about 200 odd points. Remember, at one point in time, it was an over 300 point cut that the Bank Nifty was showcasing. Advanced decline ratio, maybe that should come up for you. There's a slight bit of an improvement which has taken place in the advanced decline ratio. So it currently is on the declining side, but there's a little bit of a narrowing between the red and the green lines, as you can see. But joining us today, we have Astha, Jain, research analyst at Securities, Ashish, Kyal of Wave Strategy Advisors to answer all of your stock queries. Ashish as well as Astha, welcome to the show. Well, Ashish, let's kick off the show with you. Technically, how would you approach the market today?
See, if you look at the markets, it looks to be in a broad range. On the downside, there is 24,160 as an important support, and on the upside, 24,400 as the hurdle. So it looks like forming a triangle pattern. But I'm looking at it like a continuation pattern. I'm optimistic if it manages to break above the day's high, which is around 24,360, we could head towards 24,500 eventually. So the overall tone is buy on dips, and we should be heading towards 24,500, 24,700 levels on the upside.
Okay, all right. Any specific stocks that you're liking today?
From the stock specific perspective, if you look at something like Jindal Saw, we can clearly see a very strong run up in the stock in today's session, nearly around 4% up. And it is giving a good breakout, bouncing back from its important support levels. So looks like we can see the levels of 600 on the upside in this stock. So Jindal Saw is once a stock on the radar, and which is looking positive. If you look at from the large cap names, the stock, something like over here, we can clearly see Adani Port is another stock which can do better eventually. So we can expect it to again reverse back on the upside towards 1500 levels. We are seeing some selling pressure in today's session, but should be reversing back on the upside, aiming for the levels of 1550. So these are the two stocks on the radar as of now.
Okay, all right. Well, we have Sivaraj, who writes to us from Pondicherry, holds 18,000 shares of BEL, which is bought at an average price of 312 odd rupees. So he's sitting on a profit there. He's a short-term investor, wants to know what to do, whether to hold or sell. Well, as a short-term investor there, but I'm anyway going to ask you for a fundamental call on BEL. Then I'm going to toss it over to Ashish for a technical check. But fundamentally, what's your approach towards it?
Hi, good afternoon to both of you. So talking about BEL, yes, we are positive on the counter and recommending a hold on this counter with the price target of 355 to 360 at the initial level. Talking about this counter, the way this company is improving its share in the defense and capex space, because presently their share is almost around 12%, which was only 8 to 9% few years back. So they are continuously improving their share in the defense capex space. So that is really positive for the company. In fact, going ahead also, we are believing that margins to remain stable and the industry tailwind is high. So the combination of all these factors suggests that there is more upwards left for the stock, and hence we are positive, giving a whole recommendation to this stock with a price target of 355 to 360.
Okay, all right. And technically, how would you approach it, Ashish?
From technical perspective, I think 325 was the resistance that BEL has now decisively broken, and this breakout has also happened along with the volume. So that shows that it's going to be sustaining there. The overall MACD is also giving a buy signal. So I think the stock is bullish. We can head towards the level of 360, which is in sync with the fundamental analysis also. So 360 is the target for BEL. We can look forward over near term. And on the downside, the support or the stop loss can be maintained at around 320 levels.
Okay, support and stop loss at 320 levels for BEL. Let's get in the other query now. We have Kaushik Bhatt, who writes to us from New Delhi, holds 200 shares of Jain Technology, which he's bought at a price of around 412. So he's sitting on a good profit of close to 2 lakhs there. And 70 shares of Adani Ports, which he's bought at a price of around 663. So he's sitting on a profit there as well of around 57,000 odd rupees. He's asking, he's a medium to short-term investor, wants to know what to do, whether to hold or sell these particular counters. Well, sitting on a good profit there, but do you expect any further upside from these levels? And what would your recommendation be, Ashish?
See, if you look at Jain Technologies, we can clearly see the stock has managed to give a very strong move on the upside. And we can clearly see the mid-cap IT has started buzzing just now. So it's not very since long that we are in an uptrend in the IT space. But Jain Technology has shown a very good move from around 1,000 levels to now 1393. So I would continue to recommend a hold over here. We can expect a target of 1600 on the upside in the stock. With a very important support around 1265. So as long as 1265 is intact, 1600 is what we can aim for on Zentech. And Adani Port also, as we spoke just some time back, the overall stock looks to be bullish. We do have investment in Adani Port, so I'm anyways bullish on that stock. We can expect over near term, the stock can reach towards the level of 1600 and eventually higher. On the downside, the support for the stock is going to be around 1440 levels as of now. But if we can hold on, I think buy on dips is the strategy for 1600, aiming for 1600 levels.
Okay. All right. Well, we do have Sagar, who writes to us from Bengaluru now. He holds 131 shares of Persistent Systems at around 3,584 and 254 shares of Motilal Oswal, which he's bought at 650. He wants to know what to do, whether to hold or to sell these particular stocks. So both of them, I'm going to toss it over to you, Astha. What would you recommend?
So first of all, talking about Persistent System, we are recommending hold on this counter. So one can stay invested in this counter with the ultimate price target of 5,100. Management pedigree is very strong for this company. In fact, going ahead also, we think that the order pipeline will definitely get improved. So this is what we are expecting from all the IT counters, but especially for the Persistent System. We really like the product which the company is into, and hence we are positive on this counter. I think one can remain invested in the counter and closely watch the results also, because now the result season is about to start. Recommending a hold with a price target of 5,100. Talking about Motilal Oswal Financial Services, we are positive on this counter also, because we know as the retail participation is increasing, definitely this firm has shown a strong improvement in their all business verticals, whether it is, if we talk about their AUMs also, and the broking business vertical, every vertical is right now working in the favor of the company, and they have a strong RM additions also, so which in turn indicates that going forward also we can see strong growth in their AUM going ahead. So talking about Motilal Oswal Financial Services also, we believe that this counter is still in an upward trajectory, and we are positive on this counter, recommending a hold on this counter also, because we really want to see for both the counters. Hence, we are not recommending buy, but recommending a hold with a price target of 610.
Okay, all right. Ashish, any view?
See, as far as Persistent System is concerned, I think the stock has done extremely well. It has managed to break above that 4,435 levels also, which was the previous peak. So the overall tone remains bullish. We can see some profit booking over short term, but that should be the opportunity to buy more. Since the impulsive rise started, I think we can see the third wave going on, and the stock can head towards the level of 5,500 on the upside. As far as Motilal Oswal Financial Services, we can see some selling pressure from 700 levels. The stock has now come down to 550. So that remains little concerning. But having said that, one can maintain a stop loss in the stock around 515. As long as 515 is intact, we can start seeing some kind of a reversal sign. And if you can get the stock again back towards that 670, possibly get out of the stock at around 670, 680 levels.
Okay, all right. Well, Sagar now writes to us from Bengaluru, holds 131 shares of Persistent Systems, which is bought at 3,584 odd rupees. And oh, sorry, we've already covered this one. So it's that was on Persistent and Motilal. We have Sukamaram, who writes to us from Kerala, holds 400 shares of Indian Hotels, which he's bought at around 635. He's a short-term investor, wants to know what to do, whether to hold or sell this particular stock, sitting on a bit of a loss at this point in time. 400 shares is what he's bought. So short-term investor, Ashish, that's right down your alley. What would you recommend? What would your stop loss be for Indian Hotels? What would your target be? And do you expect, recommend an exit?
See, for Indian Hotels, just a disclaimer, we do have a holding in Indian Hotels. The overall stock, I'm going to be bullish over here, because the stock has managed to show a very strong rise. Over short term, yes, there is some kind of profit booking that we are seeing, but if on the downside, the support for the stock is going to be around 585, 580 odd levels. My recommendation would be that if you can extend the time horizon, keep it for around 6 months to 1 year, we can expect the stock to cross about 700, maybe see even 800 levels. So the stock is bullish from medium to long term perspective. The short term dip should be used as an opportunity, and try to extend the time horizon towards 6 months to 1 year. And I think he should be able to recover back his losses.
Okay, all right. But fundamentally, Astha?
So fundamentally, we are positive on this counter. There is no need to book the losses because we are expecting strong revenue as well as EBITDA growth going ahead also. Although in FY24, the company has shown the revenue as well as EBITDA growth of around 19.5 to 19.5 on the revenue front and 16.5 on the EBITDA front. So I think we are expecting this counter to continue to show strong momentum because there are two major positives which we are feeling that will be working in the favor of the company. First of all, strong room addition. So the company is working on the room addition of around 12,953 rooms over next few years. Versus they have operational keys of 24,000 presently. So I think that will really going to add, in the financial performance. And that's why we are very much positive on this counter. Stay invested in the counter. Initial price target can be kept at around 660 odd levels.
Okay, all right. Well, we have Prem Garg, who now writes to us from Thane, holds 200 shares of Kaynes Technology. He wants to know the prospects of his investment. Again, a good buy, good upside that we've seen in terms of the stock performance. Sitting on a profit there. Prem Garg is sitting on a profit of 1.7 lakhs there. What would you recommend, Astha, on this one?
So Kaynes Technology, first of all, a disclaimer, we might have the stock in our PMS also, and we might have recommended it to our client also because we were positive on this counter when the IPO came. So since then, what a move it has shown, and still we are positive on this counter. First of all, want to give the price target, which can be set at around 4,700 odd levels. So talking about this counter, their business verticals are really working very strong, and we have seen some sort of muted financial performance in the last few quarters. But going ahead also, we are expecting the company to perform strongly because the demand environment is very robust right now. So we are positive on this counter, recommending a hold because buy can be a recommendation which can be given after seeing the results. So right now only we are restricted ourselves to hold recommendation with a price target of 4,700.
Okay, all right. And the stock has done very well, even, technically. So, Ashish, what would your recommendation be on Kaynes Technology? Do you see further upside?
Yes, absolutely, because the stock managed to break that hurdle of around 3,550 and shown a very strong rise. Some profit booking in today's session, but I think the overall tone remains bullish. We can expect the stock to reach towards the level of 4,800 on the upside. So continue to hold here. And as I said, the overall space is also buzzing around. So 4,800 should be the target. On the downside, one can maintain a stop loss of 4,000 so that you can lock in some kind of a profit just in case there is a dip here.
Okay, all right. Well, on that note, we need to take a short break, but we have a lot more queries lined up. The markets seem to be stable, not showing too much of a deceleration from these current levels. The mid-caps as well as the bank nifty underperforming at this point in time, but otherwise the nifty and the sensex just about trading with a negative bias. Take a break, more answers on the other side. Stay tuned. Welcome back. Well, you're still tuned into Your Stocks. We have with us Astha Jain as well as Ashish Kyal to answer all of your stock queries. Well, let's get in another question now. We have Anvesh, who writes to us from Mumbai, who's 1,935 shares of Sakuma Exports in the price range of around 35.63. So that's his buy price. He's sitting on a loss at this point. Short-term investor wants to know what to do, whether to hold or sell this particular counter. Well, what would you recommend in such a case, Ashish, sitting on a loss at this point in time, but do you see further upside technically?
See, if you look at the stock, I think the movement is a little erratic. We can see a surge in the volumes over past few days, but there is not much of a movement in terms of price. So I would rather be out on in a stock like something like this, because there is not much of an expectation over here. We can see it is not able to break that 38 levels on the upside, and on the downside, the support for the stock is somewhere around 28.50. So it's better to be out from stocks like this. Not much positive here, but I think overall IT sector can do better. Something like Infosys or TCS can be a good bet. Diversify from here and invest into those kind of stocks.
Okay, all right. Well, we do have KS Rao now, who writes to us from Andhra Pradesh. He holds 200 shares of Arvind, which is bought at around 200 rupees per share. He's a long-term investor, wants to know what he can do and whether he can hold these shares for a further period of around 2 years. Well, interesting query there. You know, he's sitting on a profit now. He's willing to hold on for another 2 years. Fundamentally, what would your view be, Astha?
So yes, we are recommending hold on this counter, and there are several reasons behind it. First of all, as it is a global supplier of the fabric, we know about this company. So now they have a strong capex, or I think till FY27, and in fact for FY25 they have a capex plan of around 400 to 450 crores. So first of all, a strong capex plan, and they are really want to expand their two division, which is AMD as well as garmenting. So Arvind Advanced Material Division is one of the division where they are wanting to expand, and apart from garmenting division. So I think all these, whatever companies taking efforts to show their financial performance strength in going ahead, I think that will definitely going to reap benefits, and that's why we are positive on this counter, recommending a hold on this counter with the initial price target of 440.
Okay, with an initial price target of around 440 odd rupees. But would you be as confident on the technicals, Ashish, on Arvind?
Yes, of course. And first, I would like to congratulate him, because not many players sit from 200 to 400, nearly 100% return there. And he's still holding on and keeping the horizon of 2 years. That's a good sign. And the overall stock looks to be bullish. I'm optimistic that the stock will reach towards the level of around 450, 460 on the upside. At the current level, there can be some minor profit booking possible, but eventually the stock should move up, and the support for the stock is around 360 levels. So as long as 360 is intact, we are optimistic we should see 450 levels on the upside.
Okay, all right. You could see 450 levels on the upside. That stock, as you can see, has rallied around 50 odd % just in the past 6 odd months. So good going for Arvind. The stock is just about trading at around 393 odd rupees. But Puneet Saxena now writes to us from Ghaziabad, holds 106 shares of Allied Blenders and Distillers at around 281, which was the IPO price. He wants to know what to do, whether to hold or sell this particular counter. Any view, Astha, on this?
Yes, we had a coverage on this counter. We had recommended subscribe, but for the limited listing gain. And I think now we are just sticking on that view that please book the profit on this counter, because the price they have bought this IPO was quite overstretched. At 281 issue price, the issue was valued at more than 100 times of price to earning multiple. In fact, we have done some forward projections also, and whatever working we had done, we still find the issue to be costly at those levels. Although we all know that it is one of the largest Indian-owned IMFL, India-made foreign liquor, and third largest IMFL in the country, and their officers, that is brand, is really gaining momentum, because it is a mass premium brand, and they have hold a strong market share of around 11% in the Indian whiskey segment. But all these factors seem to be faded when we look after the valuation. So just due to the valuation perspective, we are recommending booking profit at the current price.
Okay, all right. That's the view on Allied Blenders. Well, for the markets, just want to point out that, we have the Nifty, which is down around 33 odd points. We have the Sensex, which is down around 111 odd points. If you're talking about specific stocks which are managing to, however, buck the trend, is ONGC, which is your top gain on the Nifty. That stock has rallied around 47% on a year-to-date basis and is up around 4.7% today as well. And a lot of the FMCG insurance stocks are doing well. So ITC, HUL, both those counters are up around 1%, 1.5%. We have good traction coming in a couple of these IT counters. So Wipro, for example, is up around 1%. And even Tata Motors not doing too badly. So that's the entire picture on the gaining side. On the downside is Divi's Labs. That stock is down around 3.8% today. Maybe there is that anticipation on export data, which is keeping the stock a bit subdued. We have Titan post the Q1 update, which is sulking. So that stock is down around 3.8%. And BPCL, JSW Steel are a couple of other losers in today's trade. But would you have a view, Astha, on Titan?
So looking after the updates right now, what we are thinking that maybe the stock may show some sort of downside momentum at present moment of a time, but really we want to see the results. So at presently we are recommending hold, but no fresh buying is recommended from our side, looking after their updates. But yes, a hold can be maintained and then a position can be reviewed once again after the results get.
Okay, all right. And technically, any view on this counter, Ashish?
Yes, if you look at Titan, the overall stock, we can clearly see some strong selling pressure here. And interestingly, the stock has not done much over, if you see past few months also, when the index is touching the lifetime high levels, the stock is making lower high, lower low. So there is definitely pressure over the short term. And unless we can see the gap of today is filled and the stock moves back about that 3,290, I think it's better to be on the sidelines. Once it manages to break back about 3,290, we can expect the up move to continue towards 3,600 levels. And on the support, as far as support is concerned, the low which was formed on 4th of June for the stock was around 3,055. So that remains a very important support at 3,055 level.
Okay. All right, so that's on Titan. Well, for the markets, just reflecting a little bit on the broader markets, we have IRFC, IFCI, which are really showing a lot of volume and price action today. So both the stocks are up anywhere between 6 to 6.5%. Remember, IRFC has already gained 100% this year, and IFCI is up around 122%. So building on those kind of gains. In fact, add BEML into that list as well from the defense space. That stock is up around 3.5% and has rallied a cool 85% on a year-to-date basis. So that stock doing extremely well. BEML Land, giving it company, is up 2.5%, rallied around 55% this year. But that's all the time that we have on the show. But do remember to email us your queries. We'll address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.